What's driving markets? Welcome to Market Take. Each week we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Roelof Salomons, Chief Investment Strategist for the Netherlands at the BlackRock Investment Institute. This week we unpack the granular investment opportunities we see in Europe. The Federal Reserve restart of policy rate cuts supports our risk-on stance, but opportunities abound outside the US if you know where to look. We have ample, if select, opportunities in Europe. Policy rates are much higher in the US than in Europe and look set to stay that way, even if the Federal Reserve begins cutting. That cap can benefit US investors. Why? Hedging foreign bonds back into US dollars captures the differential between the two rates and can boost the income European bonds offer. That's why we prefer fixed income in Europe. But getting granular is essential. For a long time, we preferred government bonds of peripheral countries like Spain, Greece and Italy. Factors like stronger growth and political stability push down on yields. But now yields and spread reflect that stability, so we close our relative preference. We also watch core countries, tracking the impact of the French political gridlock and looser German fiscal policies. We like credit over government bonds generally, and have long preferred credit in Europe to credit in the US. We see wider spreads in Europe, giving investors better compensation for their risk than what the US has on offer. That view has paid off. Spreads have tightened, giving investors a better return. Europe's outperformance over the US in equities peaked in March, but certain sectors and countries are still delivering strong returns. In terms of sectors, industrials are benefiting from growing investment in defense, infrastructure and the AI build-out. And financials are benefiting from healthy balance sheets, stronger fee business and improving profitability. In terms of countries, we prefer Spain. Spanish equities have greater exposure to emerging markets, especially Latin America, which allows benefits from easier Fed policy and a weaker dollar to feed through. Here's our market take. US rate cuts support our risk-on stance, but there's ample, if select, opportunity in Europe. We favor European credit, which can get a boost from currency hedging, and like equities in Spain, financials, industrials and utilities. For details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in. If you've enjoyed this episode, subscribe to Market Take, wherever you get your podcasts.
This material is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com/thebid.